Some of Wall Street's most experienced investors feeling the crypto whiplash after yesterday's big sell-off and rebound. Paul Tudor Jones, Stanley Druckenmiller, and Dan Loeb all have exposure to digital coins. Join us right now to try and help answer the question, is crypto just too volatile to invest in? Is Anthony Scaramucci, the founder of Skybridge Capital. He's also former White House communications director, of course, a CNBC contributor. And I think still, Anthony, a Bitcoin bull, correct?
Yeah, and listen, very much so. I still think the bull market is intact for Bitcoin. If you go back over the different slides in Bitcoin over the last 12 years, this is consistent with those slides. Having said that, you had a very big run-up at the beginning of the year because of all the expectation. But, Andrew, you know this better than anybody. Most of these smaller players are using tremendous amounts of leverage. Think of the GameStop situation. Bybit yesterday, based on our research department, we think over $8.6 billion of crypto accounts were flat out liquidated yesterday, which not only hit Bitcoin, but it really decimated those altcoins. So long-term, Bitcoin is bouncing back. I think that's a flight to quality in the crypto space. But if you look at the altcoins, I think it's good for crypto and Ethereum because they really got blasted, Andrew. But right. No, we think the bull market is very much so intact. Remember, go ahead.
No, let me just ask you, though, this about Bitcoin. Yep. And I want to get into Ethereum and some of the other coins in a second. But we had a couple things happen over the past couple weeks. We had the issue of climate become raised by Elon Musk, which was, I think, surprising to a lot of people. But I think the view was, if Elon Musk can't touch this, can certain institutions touch this? You then had the Chinese government make its statement. That clearly had a huge impact on things. JP Morgan came out with a report suggesting actually that institutional investors are not running towards crypto. They're actually running back towards gold. And so you put those three things together, and I just wonder, sort of longer term, what you make of those things, because I would think that especially the China piece and the environment piece would be meaningful headwinds.
Oh, well, let's break him down. On the Elon Musk piece, some of that could be related to the business that he's in, where he's getting those carbon credits from the federal government, and there's some concern around the sustainability of that because of what's going on in the information space related to Bitcoin. The facts about Bitcoin is more than 40% of the mining is renewable energy. The overall carbon emission for Bitcoin is 0.13% of the world's carbon emission. So if you tie the facts back to what the claims are, they don't fit. And I think longer term, as you know, when the fundamentals don't fit the story corrects to the fundamentals. As it relates to China, I think that's a more interesting story, and I accept the fact that China may never allow a cryptocurrency because they have a closed economic system, and the only cryptocurrency they'll likely have is a digital yuan. But that didn't stop the rise of Facebook, a social media network, or the rise of Google, both of which had censorship problems in China. And so we just think that Bitcoin is a fully robust monetary network scaling to over 110 million users right now, possibly 1 billion users by 2025. And so to me, Andrew, I get the conflation of the three different stories, but it's not going to match the fundamentals long term or overly hurt Bitcoin. You mentioned three great investors when we started the segment. Dan Loeb, we're an investor in Dan's business. That's fully disclosed because we file all of our positions with the SEC. He said to me this morning, do we have diamond hands? And the answer is yes. I think JP Morgan is right, however, that the saturation levels or what people thought at the beginning of the year related to absorption by institutions is not there yet. Smart players like Paul Tudor Jones and Stanley Druckenmiller, Dan Loeb are in there. But I don't even think we've cracked the surface of what could happen over the next 6 to 12 months. So JP Morgan is right about that. That's my honest assessment. Remember, Skybridge has 35 or so hedge funds in our Series G portfolio, and we're also tracking 1,200 funds. But with the SALT conference, we've got at least 3,000 or 4,000 institutional investors that we're surveying. So I do think JP Morgan is right about that topic.
Shepard Smith here. Thanks for watching CNBC on YouTube.